Hey everyone, Brian from Bear Bull Traders here. It is Sunday, January the 9th, and we've got the first week of trading in under our belt here for 2022. Pretty rough week overall, especially if you were heavily invested in the tech sector. So let's take a look at how the first week went and what we can expect here going forward into the new year. So we'll start out with the week in review. Of course, last week's market action was pretty shaky for the first trading week of the year. A lot of that due to the hawkish tone set in the Fed minutes that were released. A lot of people, I think, were taken by surprise by the amount of hawkishness there. And of course, on Friday, we had the weak job growth number, but that was sort of counterbalanced by the fact that we're at a record low unemployment rate. So maybe an indication there of lack of participation in the labor market. So in terms of the indexes, the Dow managed to only drop by about 0.3%, which was the best of the indexes. And of course, the Qs technology sector with the rising interest rates took the biggest hit at 4.5% down, and the IWM, of course, almost 3% down. SPY kind of in the middle there, lost just under 2%. So overall, the down week on all the indexes. Where were the areas of strength and weakness? Of course, energy and financials were strong for the week. So financials, not surprising, as I mentioned in my previous videos. Interest rates going up should be good for the financials, and that's essentially what we saw there. Good gain in the financials for the week. Energy also had a good week. Oil was up fairly significantly. Of course, technology and the healthcare sectors were weaker. The 10-year Treasury note, of course, that was the interest rate rose. I think it hit actually as high as 1.8%, which is pretty much some of the highs that we've seen in recent months. So we definitely are knocking on the door, going higher here. And the U.S. dollar was pretty choppy on the week based on all the news the news flow that was coming out. And before we get going here, looking at the charts of the week, just a quick note, my book on Amazon, How to Swing Trade. If you haven't checked it out yet, it's also available in audio as well as Kindle. So let's get down to looking at some of these charts here for the week. Starting out, as always, with some of the Treasury yield prices. And you can see here the 20-year, look at that, how it just keeps curling up here, strengthening as we got that hawkish tone from the Fed. And we'll also see that on the 10-year as well. You can see here we made a high of 1.76. It's pretty close to where we went out, and of course this is right back at this area here where we had prior resistance. So knocking on the door of going higher. We've got that 200-day moving average as well, but we could be heading up to 2%, which of course will be good for the banks, but it won't necessarily be so good for technology, and certainly anything that's really got that high PE multiple that we talk about. So here's the transports. Again, we seem to be sort of chopping in a range right now. We've got this level that was set 1660, and now we've got this low of sort of 15, I'm going to call it 1550. We seem to be sort of stuck in a range. You can see these moving averages kind of coming together here. Momentum maybe rolling over a little bit here. So we'll see how that plays out in the coming week. Again, the Dow, really no reason to move higher. But again, or this is the transports on the week, sorry. Yeah, this is, again, just looking like choppy price action. And the Dow, let's take a look at the Dow here. You can see we tried to break out, bit of a false breakout here from this prior high. And now we've pulled back into a trading range. Again, we're right back down, checking out this sort of breakout level here. So again, seem to be into some fairly choppy price action here. Momentum is rolling over a little bit here. The moving average is crossing back and forth. And again, we're probably going to do some consolidation here in the next couple of weeks, I would think, at least. Not expecting a big breakdown, but also not expecting any kind of big move higher. Here's the weekly chart again, false breakout here, and now just sort of we've broken this trend line and just seem to be sort of churning sideways for the time being. The Qs, as I mentioned, this this prospect of higher interest rates really taking the cues down. We're right at a level of support here. If we do fail here, we've got a lot more possible downside, maybe down to the 200-day moving average, but this is going to be, Monday's going to be an interesting day to see if we can actually bounce off this level or if we start to break down further. On the weekly, you can see we're just right at an area where we've been saved before. All of this moving average, you can see here that the 20 moving average on a weekly has saved us before, but not looking as promising at this point. Daily on the SPY, here we are. This is another area where we've kind of been saved before. We've got a series of higher lows, and again, this is false breakout. Really tried to go higher and just couldn't push back. So now we're into this sort of trading range here, and I suspect that's probably where we are going to stay. You can see some of the momentum indicators definitely rolling over here, so we're definitely losing momentum to the upside. Again, on a weekly chart, you can see here where this 20 moving average has kind of saved us before. We are a little bit away from that, but not very far, so keeping an eye on that 464 level, or 454 level, I should say. That will be kind of critical. The IWM, again, had this really nice breakout here back in November, but again, a bit of a false breakout, lower high here, and then right back into this trading range. So as long as we hold this sort of 212 level, I think we'll be looking for a bit of a bounce there. But again, we're into some pretty choppy price action, and again, momentum definitely waning and moving to the downside here on all the price in this. And again, you can see here we've been chopping in this range pretty much since the beginning of 2021. We're right back into that range again. The dollar, again, the dollar just chopping in sort of a bit of a range here right now. The news on Friday on the jobs number obviously took the dollar down. So, and then I think it took it up a little bit when the hawkish tone prospect of higher interest rates. So it's been, it's basically just moving on news, but it is trapped in a range here. The VIX, given the fact that we were down on the day, on Friday, especially Thursday and Friday, you can see the performance on the VIX. We really didn't see a lot of fear coming into the market, so that kind of gives me some feeling that maybe we're going to be sort of staying range bound rather than looking at a hard sell-off, because there was really no fear, at least in the market, no push higher on the VIX. Now, typically the VIX does tail off on Friday over the weekend, so we'll be keeping an eye on that to see if sort of 20 is the range that we're going to stay in or stay under. And Bitcoin, as I mentioned here, this was a pretty critical level, 46,000. Once we lost that, and you could see here it was struggling to break out through 50,000. Came back down here, held 50 or 46 again, but you can see here as soon as we got to the 200-day moving average, just rolled over, and now we're down around 42,000, which again is, if you look back here, this is probably an area, this 41,000, 40,000 is probably an area we're going to have to see some significant support on as well. So that's a prior low from right here. And again, if we do end up losing that level, then yeah, we could see mid to low 30,000s on the Bitcoin. So it's just one cryptocurrency. So let's go quickly through some stocks we can watch for next week. Obviously, still watching Apple. Apple's a big component of indexes, and a stock that's sort of always in favor. Even when it does sell off, usually presents an opportunity. So it looks like this sort of 167.50 level could be an area if you wanted to get involved there. That would be a decent area for Apple. But again, sort of holding on there. We had a bit of a sell-off after the Tuesday, Wednesday, and Thursday, and then Friday we kind of held this level. Bit of an indecision candle on the day there. AMD's right back down to a sort of 130 level. Again, this could go lower. I'd expect a little bit of a bounce, but watch out for these moving averages. It could go lower with interest rates continuing to go higher. Baidu, Baidu's kind of interesting. I mean, some of the Chinese stocks did catch a bit of a bid last week. Yeah, you see, it had a big move up last week and a big move Thursday. Bit of a rejection to a move higher on Friday here. So it looks like sort of the 155 area is an area that's pretty going to be pretty critical, and we could come back down to the 140. So it could be an interesting play. Disney still looking interesting. I think it's basically going to find a range here for the time being and kind of chop. Facebook, again, sort of stuck in this range between 320 and 350, as I mentioned last week. Maybe a possible options trade there. Lucid had a nice breakout here on Friday. It looks like it's starting to break higher, so I'd be watching this 42 level to see if it can break out through that moving average. Momentum heading to the upside. We got some decent volume coming in, and the stochastics starting to turn back up there. NVIDIA, again, right at, as I mentioned, the same with AMD, sort of right at a critical area of prior support here, so watch for that to either bounce or break down. TAN, looking, again, just broke down again. Need that build back better bill for that to catch a bid. And Tesla's was pretty volatile for the entire week. 1200 looks like it's going to be resistance, and maybe we'll keep finding support here around 900 for Tesla. So quite a range there. Here's the USO. This is the US dollar I mentioned here. We had a nice little breakout on it during the week, and that's what drove energy prices and the energy sector higher. And let's take a quick look at some sector trades here. This is UNG, natural gas. Kind of looks like it's starting to catch a bid here. And weather's starting to get colder on the East Coast, so maybe we're going to catch a bid maybe up to 1390 or somewhere in and around that range there. But it's definitely putting in a bit of a bottoming pattern here on UNG. So possible long there. Again, we looked at the USO chart already. And as again I mentioned the banks, you can see here we had a really nice run up on the banks. This is BAC, nice breakout on Friday on BAC financials. Again, watch for financial strength as interest rates continue to go higher. Here's another one, C. He's the KRE, which is the ETF for the regional banks. You can see it's breaking out. Again, regional banks, very interest rate sensitive. Wells Fargo, nice run up again, and that's it. So let's just wrap things up here, January 10th. Let's look ahead here to the coming week. You can see here some of the indexes. I would say support we're there now on the Qs at 380. So watch for either a bounce or a failure there. SPY, we've got support a little bit lower. The Dow, support a little bit lower, and IWM really hasn't changed. 212 is still support. There we've got a little ways to go to get there yet, but watch the Qs particularly. And if you're watching the Qs, take your cue from pardon the pun, take your cue from the interest rates. If we continue to see interest rates go higher, watch for the banks to do well, watch for the technology sector to continue to do poorly. There's going to be rotation of money out of the technology sector, high growth, high PE sector into the financials. What have we got coming up this week in terms of economic events? We've got ISM Tuesday, ADP report, employment report on Wednesday. So people who are watching ISM and ADP numbers. And earnings this week. We are actually, believe it or not, back into earnings season. So we've got Tilray on Monday. We've got Albertsons on Tuesday. We've got Jefferies on Wednesday. But then this is where we start out the earnings season again. JPM with the banks, JPMC, Citigroup, and WFC on Friday. So watch for those numbers to come out, and yeah, we're back into earnings season. So that's it, everybody. Should be an interesting week. So keep an eye on those interest rates. I think that's where things are really going to drive where everything else is going to go, and some opportunities as well as some places to be careful in. So That's it. We'll talk to you hopefully in the morning. We'll be on at 8 in the morning, starting out with a pre-market show right up to the market open and then trading at 9:30. And of course, we'll be on live at YouTube on YouTube prior to the market open, so you can join us there. Have a great rest of the weekend, everybody, and we'll hopefully see you tomorrow, Monday morning, bright and early. Bye for now.